Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So, as always, we'll start off with the Tesla weekly insured numbers from China, jump into the European numbers, which are a bit better than last week, but still, we're still down quite a lot year to date compared to last year. And then I do want to touch on, well, the Dan Ives price target right now and how that compares to the previous one and the one before that. Quite strange if you ask me. And now let's talk about Elon Musk being fully back at Tesla, fully focused on, well, what comes next with the tech space, what comes next with Tesla, with SpaceX, and how that will impact a stock like Tesla. So if you enjoy this type of videos, hit all the buttons, especially the subscribe one. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so the Tesla weekly insured number came in at 11,100, which as you can see is a huge jump week over week because it has been 2 weeks in a row where we've seen sales drop and there was no explanation, actually, no explanation given. Some say, oh, just demand that fell off a cliff. But if that's the case, then how come we now have a, well, super nice jump here from 3,070 to 11,100? That's a big jump, but we're still, of course, down year over year. Same time last year, for the quarter, we were at 62,687. Currently, we're at 47,570. And the same week last year, the number was 13,800. Now, of course, we'll now wait and see if next week we continue our way up. Because if we go back down, then clearly there's something going on there. But if we continue our way up, then probably these 2 weeks right here were just, well, an anomaly, and, well, we're now just back on track, back with our momentum. Looking at the split between Model Y and Model 3, actually for last week it was very close to being even. Usually it's Model Y basically destroying Model 3, well, the mix. But as you can see right here, that last bar is pretty close to 50-50, a bit more Model Ys than Model 3. But as you can see, the week beforehand, we had very little Model Y and a bit more, well, it's basically, I'd say 75-25 Model 3 to Model Y. So again, something happened in the last 2 weeks, which I still have no explanation. If you do have, do let me know down in the comment section below if maybe there was a specific holiday in China and maybe retooling at the Shanghai factory. Let me know down in the comment section below. Moving on to the select European countries, we're down year to date 26.4% compared to the same period last year. And these countries are UK, Norway, Netherlands, Sweden, Denmark, Spain, Italy, Switzerland, Czech Republic, and Ireland. Of course, we're going to look at the numbers from Germany and France, more specifically when those numbers come out in early June. And the number for the week here was 2,100. That's up from the 1,700 the week prior. So yeah, there is a small recovery, but yeah, we are still far away from where we should be. Moving on to an analyst that has a new price target for Tesla price target of $500. And that's, of course, Dan Ives. Now, as you know, and as I've covered, and actually I'll show you, March 7th, Dan Ives posted, "We are adding Tesla to the Wedbush Best Ideas list and reiterate our outperform rating and $550 price target." A month later, that price target was lowered to $315. And I quote, "We now estimate Tesla has destroyed at least 10% of its future customer base globally based on self-created brand issues, and this could be a conservative estimate." As I said then, pretty sure you could have said that a month ago. A month ago was basically when, well, an outperform rating and a $550 price target. But you know what was the difference? The difference was that here, when they lowered the price target, the stock was down quite a lot. Yeah, strange how that works, huh? Price drives sentiment, which then drives, well, downgrades, upgrades, and higher or lower price targets. So of course, since Tesla stock is up 53% since that downgrade, since the reduction of the price target, then yeah, only a fool would not put it back up to $500, right? And this leads us to the new price target of $500. Then, we believe the golden age of autonomous is now on the doorstep for Tesla. While there is some wood to chop to turn around Model Y growth in China and Europe, we believe, and it doesn't even talk about the United States, strange, we believe the core focus for investors is the AI revolution is now coming to Tesla, which will make Tesla one of the best pure plays on AI over the next decade. We estimate the AI and autonomous opportunity is worth at least $1 trillion alone for Tesla, and we fully expect under Trump White House, these key initiatives will now get fast-tracked as the federal regulatory spiderweb that Musk and co have encountered over the past few years around FSD autonomous clears significantly under Trump. We don't know if that will happen or not. It still needs to pass all of the regulatory approvals and whatnot. Yes, maybe now some of the things might get fast-tracked, but I guess they still have to go through all the necessary steps. So maybe here again, some more wishful thinking. We believe Tesla could reach a $2 trillion market cap by the end of 2026 in a bull case scenario. The $1 trillion of AI valuation will start to get unlocked in the Tesla story, and we believe the march to a $2 trillion valuation for Tesla over the next 12 to 18 months has now begun, in our view, with FSD and autonomous penetration of Tesla's install base and the acceleration of Cybercab in the United States representing the golden goose. We believe FSD penetration could increase to 50+% and change the financial model margins for Tesla looking ahead. We believe Tesla remains the most undervalued AI play in the market today. Rome was not built in a day, and neither will Tesla's autonomous and robotic strategic vision. There will be many setbacks, but given its unmatched scale and scope globally, we believe Tesla has the opportunity to own the autonomous market and down the road license its technology to other auto players, both in the US and around the globe. You see, the problem I have with that is that you could have said the exact same thing a month ago, right? Just like a month ago or a month and a half ago, when he lowered his price target and said all the negative things that me personally have been saying for the last couple of months when Tesla was at $400, for example, you could have said it then, but you didn't. You didn't because the stock was going up and we were higher. But when the stock goes down, suddenly you have these fancy schmancy explanations as to why that has happened after the fact, of course. And now that the stock is back up 50%, and now we're seeing the autonomous and robotics future and everything that can happen, additional $1 trillion to the valuation. Yes, because in a month's time, that's exactly what has happened, right? Nothing has happened. Literally, nothing has changed from a month and a half ago. Yes, Elon Musk did say that he's going to step down a little bit from Doge. Okay, fine. But business-wise, the roadmap has not changed. A month and a half ago, June was still the target to launch the robotaxi network in Austin. Okay? Optimus robot, nothing has changed either. We had more videos about it. Wow, congratulations. What has changed, and this will always remain true every single time, it's the price. The price and the sentiment. That has changed, and that's why I don't take this analyst seriously at all, especially not the one on the screen. Yes, he's loved by many retail investors because, well, he talks to them, he makes up fancy schmancy stories, the Messi of AI, the LeBron of AI, the Godfather of AI for Jensen, and this and that. Great storyteller, no doubt about that. But an analyst is still an analyst. And by the way, if you didn't know it, maybe now you will, Dan Ives doesn't even own Tesla stock. Moving on to Elon Musk. So, Elon responded to this post right here by Barrett. I wonder if this is why Elon has somewhat moved away from politics in order to accelerate GDP growth with humanoid robot. If he believes this is the only solution, then this would be his most logical choice. We're talking here about, of course, the bill that passed, the fact that they're now going to focus more on revenue growth, right, debt to GDP, accelerate growth, and so that should, let's say, take care of the deficit, hypothetically speaking. To which Elon Musk responded, I've come to the perhaps obvious conclusion that accelerating GDP growth is essential. Doge has and will do great work to postpone the day of bankruptcy of America, but the profligacy of government means that only radical improvements in productivity can save our country. Of course, labor is extremely crucial to the economy. He then responded to a post talking about the fact that X was down for numerous hours. I think there was a fire that broke out in one of their data centers. So he said the following. And by the way, he went back to the Elon Musk handle on X, finally. To be honest, I find it very childish and stupid that he always tries to change the name and whatnot. But okay, he's the owner, he does whatever he wants. Back to spending 24/7 at work and sleeping in conference server factory rooms. I must be super focused on XXAI and Tesla, plus Starship launch next week, as we have critical technologies rolling out. As evidenced by the X uptime issues this week, major operational improvements need to be made. The failover redundancy should have worked, but it did not. This now tells me that Elon Musk went from chill mode to serious mode. Now, that said, I know it's going to be very exciting to see this post and everybody's going to blow this up, etc., etc. That said, a roadmap is still the roadmap that we've had before. A lot of the things that they've been working on cannot be accelerated just because Elon now spends 24/7 at work and sleeps on the factory floor or whatever. Some of the things just take times. Yes, maybe some things can get accelerated. Maybe some things will change. Maybe they'll come up with new ideas because he's back, he's now more focused. Yes, that can definitely happen. But remember, he talks here about XXAI, Tesla, and Starship, which is expected to launch, I believe, Tuesday again. But of course, for those that really wanted Elon back in serious mode back at Tesla, I guess you got what you wished for. And yes, this should be all in all very, very bullish or positive, far from negative for the investors, for Wall Street, for whoever is looking at Tesla. Of course, on the flip side, you might say, oh, the brand damage that has been done to Tesla is because of Elon Musk. And since Elon Musk is now closer to Tesla, well, the brand damage will just follow him even more. Well, I guess this is something that you cannot win, right? You do this, you lose. You do that, you lose as well. Or actually, it's you flip the coin, heads you lose, tails I win. You understand what I'm saying? And so, all in all, that's about it. Elon Musk being more serious about the companies that he runs and owns is great. The $500 price target from Dan Ives, couldn't care less. The numbers out of China for the week were good. Let's see if that trend continues, because China has been one of the strongest markets for Tesla. Europe, very, very weak. United States, weaker than before, but still okay-ish. Now, of course, as Elon Musk keeps saying, you don't invest in Tesla just because they sell cars, right? You have to believe in the autonomous future. You have to believe in the robotics side of things. And of course, you have to believe in the energy side of things as well. So all in all, that's about it. Enjoy this type of videos, hit all the buttons, subscribe especially, and I'll see you all in the next one. Bye-bye.